only need a single pattern to make you money consistently in the forex market. Welcome back once again to this YouTube channel. In today's video, I'll be teaching you how to make money consistently with just this common simple pattern, double top pattern. Just two double top break, just a normal double top chart pattern and a retest of the neckline is all I'll be teaching you today. Trading with trend is a super consistent way of trading. So if you've not heard about trading before, I've made my previous video, I made a video on how you can actually learn how to trade the forex market, how you can step into the forex career in this year 2025 and make awesome amount of money. So go check the video. So if this is your first time in this channel, kindly click on the subscribe button, because there are lots of videos coming out this year that will elevate your trading, that will push you to the next level in the forex space. So let's go into the video and let's go to the chart. Come to the chart. So I'll be giving you rules to actually trade this system called double top. Those who have not heard about it before, let me give a pattern view of it, and before I enter the rules to actually trade it. A lot of traders find it hard to follow rules, and in order to actually achieve success in this trading space or with any trading strategy you are trading, you need to learn to follow those rules as strict as possible. Every strategy works. It's just all about the business of number and business of sample space. So following those rules accurately is what will put the odd of what success in your favor. Just let the number thing do itself. So I'll first give you how the pattern looks like for those who don't know how the pattern of double top looks like, or possibly know what, or is not sure on how to actually trade it properly. So I'll give you the view. So double top is just a chart pattern. Is one of the chart patterns which we have. And what are chart patterns? Chart patterns are patterns on the chart that has been back tested over time, and that traders have seen that yes, this pattern repeats itself, and anytime it has A plus B plus C together, it produces D, and either it produces a downtrend or a buy trend. You get, so a downtrend or an uptrend. So that pattern is, we have different types of chart patterns. So double top is one of the peculiar pattern that we have in one of the chart patterns in the forex market technical analysis. So I'll show you the pattern here. So the pattern is just more of like you having is a reversal pattern. Take a note, the reversal pattern. Let's say the price has been let's say the price has been pushing up, and the price is finding it hard to go to the upside again, and actually place the pattern before dropping. And when you see that pattern coming up, you're like, yeah, this is a double top pattern that is appearing, and this is what you do to follow. So the pattern is like this. You have price pushing up, going down, pushing up again, forming an equal high, then going low. That's the first step of it. Then when you get to enter is at the neckline here. At the neckline. So you have the two equal highs. Sometimes they may not be equal, but the body of the candle of the second leg must not break above the wick of the first price. That's one rule. The first, let me increase this to 4 pixels. This first leg, then the second leg makes it what? A double top. This second leg the body of the candle must not close above. If the body of the candle closes above the price, above the price of the first leg, the high chances that a break of structure has occurred, and the high chances that what the price just wants to retrace to keep going to the upside. So you must not take a trade or call a pattern double top when the body of the candle has closed above the first price of the leg. Take note. And this is the first leg. Let me show you first leg. Let me put something like here. And see this is what's left. And where is the neckline? This is the neckline. And I'm sure you guys understand the concept of support and resistance. I don't know if I have made a video of support and resistance recently. There's what we call support. When the price is pushing up, is buying due to what? A level of support which the price got to. So when the price is selling, it is selling based on what? The level of price, the level where the price is finding it hard to go to the upside. And the way I refer double top to is a level where price is finding it hard to break through, like your rooftop. Your rooftop, wherever you are sitting down, is like an hindrance for you to break off through the roof. And the support, the ground level is known as your support. So the double top one, you have the ideology that yes, the price is at what? A resistance level. So this two leg here is a resistance level noted, and you know how to trade the resistance so that yes, this is a resistance level that allow the price to sell. Anything that makes the price to sell shows that what sellers are there. And this was the level of support where price was possibly holding before. There are high chances, this is just a textbook trading, there are high chances you may have the pattern form like this, rejecting a lot here before even breaking down, or you now wait for the neckline. So that level is actually going to be a level of support before, but there's this ideology, if you've not watched any video relating support and resistance, is if there is a level of support and price pierces it down, that level will be used as what? Will be used as resistance. That's how you hear people say support turns to resistance and resistance turns to support. Let's say you are privileged to break through your roof. Let's say you're an electrician or you're a roof person and you're able to break through your roof, and as soon as you break through your roof and you climb through your house roof, the roof now serves as what? As support. Before it was actually serving as what? Resistance. But when you are able to break through now, it now serves as what? As a level of support. Let's say the ground level, anything that makes you to break the ground to the downside, and let's say in an underground, there's an underground house where you live, and you enter inside, the ground now serves as what? It now serves as what? As resistance to you. You can't break through. So that's how it is. So that's the ideology we use to view the chart. So what do you need to see in order to pick the trade? That's what we're getting to the rule. So rule one, if you have your pen there, rule one is what? Trade with the 4 hours and 1 hour trend. Trade with what? The 4 hours and what? And the 1 hour trend. What I mean, when the time frame in which you'll be identifying the pattern is going to be on the 1 hour, and I'm sure you know how to identify the trend in the market. The trend is all about identify where the price is pushing to, where we have more pressure. And how do we know that? For an uptrend, you have the price making series of higher highs, higher high, higher low, higher high, higher low, higher high. You can see impulse correction, impulse correction, impulse correction. That is it. If you don't know, and if you have a question with how to identify trend, you can drop a comment. I will help you and give you insight, or just have a personal call with you on how to identify trend. So for the downtrend, we have the lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. That is how you identify a downtrend. You see the series of what? Impulse correction, impulse correction. But if I'm just saying impulse correction, you may not get where is the impulse going down to. That's how we have the concept whereby a general note for lower low, lower high, lower low, lower high, lower low, and lower high. And as soon as you have, before the next lower low is being formed, there's what called break of structure. That's the break of the level of what? Of support, so that it will be used as what? As resistance. So rule one is what? Trade with the 4 hour trend. Then rule two will be identify the pattern on 1 hour time frame. So you identify what this pattern here, this two leg rejection, 1 2 double top, you identify it on 1 hour. You identify especially this, identify this on 1 hour. You identify this on 1 hour. You have to see it on 1 hour. 1 hour time frame. You know time frame. We have currently on the 1 hour time frame. You identify this on the 1 hour. Then rule rule 2, that was rule 2. Then rule 3 will be wait for the break of neckline of the just wait for the break of neckline, not to complicate it. So let me bring this rule here. So this is the neckline of the double top. Let's say you have your head like this, then this is the neckline, and this is the neckline of this chart pattern. So you must wait for what? You must wait for the break of that neckline. You must wait for the break of the neckline to confirm that yes, price is heading down. Like I said, it's a reversal chart pattern. So you wait for what? Retest of the neckline. This line, you must wait for price to get there, and okay, wait for the break of the neckline. Then next is okay. Let me write that correctly. My keyboard deleted that. Hold on. So rule 4 is wait for retest of the neckline. I'm sure a lot of you have heard what retest means. Retest is just very simple. It means that price is going back to the level of the support or resistance that was broken. So this neckline was broken, you can see clearly, and now price is going back to that place. So you wait for what? Price to push back this place and wait for an entry candlestick signal. Sometimes you may have the signal even around there. You can have it around there. If you want extra confidence, you can actually use your fib level to mark out a level where that price will retrace to. But mostly it's either just have this wider range to have where the price will actually pull back to. And if you want to be more safe, you can actually wait for that two leg rejection. That's first rejection, then price having more being wicked out. But when you have the retest of the price, you won't just place your trade immediately. You won't say, okay, the price has pushed to the neckline, I'm executing my trade instantly. No, it is not done that way. You can't execute your trade instantly. You have to wait for that price to produce an entry signal. So rule 5 is what? Rule 5, wait for entry signal. So just candlestick is the entry signal you'll be waiting for. Look at the rules. Why is this thing always jumping what I wanted to type? So you wait for what? An entry signal. Entry signal. And what are the entry signals? Is what? Your candlestick pattern. The bullish this is a downtrend now. So the bearish engulfing, an evening star, and hanging man. You wait for more of those 3 cow candlesticks, that's 3 soldier, 3 consecutive red candles almost being equal. But mostly I love the evening star and the bearish engulfing. So you wait for it here and take the trade when that candle appears there, and put your stop loss above the candlestick, few pips above the candlestick, few pips, or you can even put above the double top, and target a balance risk reward of 1 ratio, at least 1:2 or what 1:3. This is a simple system that can actually make you money consistently. So we'll actually do one or two things. It's going to put this strategy is going to put the odds of success in your favor. So you need to master it. You need to backtest it. You need to open your charts and look at the success rate and look at the failure rate. That if you are able to take 10 trades, can it make you 5 wins? Yes, it can. You can backtest it. If you can backtest this way I gave it to you, you can actually make consistent money with this simple trading strategy. So let's look at something quickly. Okay, now on the 4 hours here, let's just look at the recent price action here. So we have the price here at a very clean downtrend. I think I'm even seeing the pattern very well. Sorry, that's not. I'm just using the break of structure to note here on the break of structure here. Okay, the break of structure here. Break of structure, and look at even the double top there. On to make rejection, retest. But this failed. It came back with 3 rejections. So let's go down. So we have on the 4 hours, you can see we have it actually on the downtrend. So go down to 1 hour. Go down to the 1 hour. Look for a pattern on that 1 hour. Yeah, I said on the 1 hour trend. So if you look at this 1 hour time frame, you can see the price making series of what lower lows and lower highs, and price is going back to this level. So we're able to point out, I think we have 2 double tops here, and this is the first one. The first double top. Sorry, this is the first double top. This is another double top here. So the first double top, let's see, the price went down to the neckline, and let's say you are entering off that level here, and let's say you're entering off this big candlestick, and you put your stop loss above it and target, let's say 1:3. It failed. Yeah, so this failed. Now let's look at this here on that double top. Then we still have our downtrend there. Then this is the neckline, and here we had got a bearish engulfing candlestick and put the stop loss above. You can see an aim a 1:3. You can see this is massive. You can see you lose 1 year, you gain 3 years. That's why I said a balance each reward. Trading is very easy. It's only all about the number business. It's all about you understanding how many wins you can have in a roll. Not even a roll, because you don't actually know how the wins and the loss will come. Whether you are going to have 2 losses in a row, 3 wins in a row. It's just a probability thing of win loss. You can have them. But the main thing that will put the profitability in your favor is your RRR, your risk to reward. If you have 5 trades that you have 5 losses, let's take a math here quickly before I don't want the video to be too long, and it's too long. I'm just looking at the time. So let's say 10 trades. You win 5. When you win 5, that's, and with 1:3, that's 5 times 3, that's 15%. And let's say your loss 5. Then that's what, and you're risking 1% you're risking 1% consecutively. Why is my keyboard? Then that's minus 5%. The total for that month will be what? 10%. Very simple. The total for that month will be 10%. You are still going to be up by 10%. That is going to pass your phase 1 prop account by risking 1% on every trade. It's going to pass your phase 1 and even putting you on phase 2 2% plus, because most pro firms make use of 8 and I think 4 or 5. So this can actually put the odds of success in your favor. If you love this video, kindly like, drop a comment. If you have any question on this chart pattern, I'll be ready to solve it for you. If you want me to mentor you personally, drop a comment. Use the info in the description box to get across to me, and I'll be happy to help you. Sorry that the video is long. I think it's up to almost 20 minutes. So take care of yourself and enjoy your day. Bye.